Good morning, everyone, and welcome to Nadex Morning Analysis. It is Tuesday, February 16th. My name is Todd Rich. I am with Nadex. With me, as usual, is Brian Caprice from Keep Trading Simple. We're going to talk about some hot spots in the markets today. We actually have some things clipping around quite a bit, so some things to discuss. But before Brian and I jump into it, I do need to share this disclaimer that trading involves risk. It may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk, and that this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Now, I'm going to slide this over, but before I tee up Brian, I just want to kind of go through what are we seeing on this Tuesday after President's Day. One, equities are all higher. We're seeing equities all up 0.5% or more, up close to 0.75%. A big move over in the UK. The FTSE was up 2.5%. That was the big mover. We'll probably talk a little bit about that in the currency realm. Two, gold collapsing. And we're going to go through why we're seeing some struggles with gold, quite a bit going on with gold. And then, if you haven't noticed, the entire United States is freezing up. This weather is not helping at all, and it's causing some disruptions in the energies markets. We're seeing movement in oil and nat gas a bit in the futures markets, but where we're really seeing the disruption is in the physical delivery, the spot market. Absolutely crazy because people need, to heat, but the natural gas pipelines are freezing up. It's not pretty, particularly in the Southwest, where they're really not wholly prepared for this. So there's just a few things which we're going to discuss. Let's get into it. Brian, what do you think? Should we start with? Want to start with gold?
Yeah, I'm not freezing here today. We're up to 49 degrees, so I don't know about all the crazy people
inside
out here
or outside.
I'm gonna say outside. It's 47. It was 30 yesterday. Today is 49 is the high, and then back down to 31. So Maryland and Mother Nature it's one of these things.
I'm glad you got that going for you. I got a foot of snow. I got a shovel. I got my dog upstairs.
Yeah, no.
She's got her legs crossed going, would you hurry up?
Nope. We had that earlier in the week, and I have a Great Dane that doesn't like cold weather, rain, anything. So trying to get a 100-pound dog out the door, it's like, come on, go outside. You're too big, for this stuff. Anyway, yeah, so a lot of movement. Looking at the 24-hour pip changes, we've had a lot of pushes and reversals, so it doesn't look like there's any currencies taking off majorly. I'd say the dollar yen, dollar CAD are the two biggest ones to watch because of all the state earlier. So if you today, a lot of this, again, gold, dollar, currencies, indices are all coming from the same exact spot, and that would be, Bullard from the Fed. Now, Bullard is not normally the biggest market mover with his speeches, but he is known in a couple different realms. He's considered the Fed expert on cryptocurrencies, and he's made some comments with that. But right now, he's made some comments, and he's talking about we're in good shape for inflation right now. Interesting statement, considering we just passed a $1.9 trillion stimulus package. And inflation's in a great spot. He says he sees inflation moving up this year, and the Feds will take that into consideration. He said the biggest thing in equities is tech firms and how high investors will value them. Bullard says this is not a bubble. This is just normal investing, which again is why the indices are going higher. These zero interest rates, crazy. It's not a bubble, guys. Again, this is the Fed talking about this. He also has, there's no value created in the GameStop trend. A lot of money is changed hands. Again, this was kind of the whole, Reddit versus, the trader versus Wall Street. And again, he's saying that at the end of the day, nothing really changed except money that switched between, buyers and sellers. And that was it. Starts talking about there's a lot of exogen, you're going to see speculative action from time to time, but financial conditions are generally very good right now. So none of this is really necessarily the worst thing in the world. And because of it, we're seeing the dollar switch over and look at the Dixie. The Dixie is a dollar index. You can see over the last 3 hours, we've gone from 90 all the way up to 90.5. We've seen things like, where's gold? Let me drop over here. You can see gold go from this 1825 area, and now we're down into this 1795. In 3 hours, we've dropped over $25 because of this kind of release, and it's been absolutely crazy. I am seeing, and again, looking back, we can see that the last time the price was this low back around February 5th, we had a quick down, but right around that 1790 area, if you guys look right in this area here, you're seeing that it's kind of again, I call it the sawtooth, but you see it's very rough, a lot of wick coming back down again, a lot of buyers stepping in. So it's going to be an interesting level to see if we hold. And again, a lot of this is, can we stomach the open in 25 minutes if we're able to come through this with the retail trader jumping in? But retail traders typically this absolutely just huge drop down, and then all of a sudden it's like, oh, I need to sell. And that tends to be where there's reversal. So I'd be looking for some type of a bounce. Again, we need some basing, maybe one of those little kind of confirmation pullbacks to be able to get long from this area.
Yep.
But I think it's a decent level that we should mention.
All right, let's take a look at this, because there's also some other things to mention in gold. And I wanted to put let's just bring this chart in a little bit so we can really see it a lot better. You can see this level back here where back in the beginning of February, where we did get some buyers stepping in at around that 1785-ish level. Now, gold did do something very interesting yesterday. You'll probably read about it, and I want to point it out. I did put some moving averages on this chart. That blue moving average is the 200-day moving average. That purple one that you see right here, right beneath it, that is the 50-day moving average. When you see the 50-day moving average cross the 200-day moving average, it's a lot of people will call it out as the golden crosses or the big crosses. When it crosses it to the upside, as it did back in February, a few weeks back, that's a bullish sign. It has a really ominous name when it does it to the downside, when it's a bear. They call this the death cross. So we're actually seeing a death cross that got performed yesterday in gold, where the 50-day crossed underneath the 200-day moving average. And then Bullard speaks this morning, and gold just tanks. So what could you potentially do with this? I'm looking at a couple of knockouts. If you were looking for a bounce, let's pick one where you wouldn't get knocked out, at least. If you were looking for a bounce down here and you saw some support down at the 1785 and you're thinking, they might push it down, there might be a knockout in here where, with some type of defined risk reward, if it got down here, you might want to look for a bounce. That's one thing that you could potentially do with this. At least you're protected in the event that there ends up being a complete washout. It looks like some buyers are trying to step in at the moment, but again, we'll wait and see what happens when retail traders come in about 22 minutes. And I would say keep an eye on gold. There's going to be some movement here, definitely some opportunity. Let's keep moving along. So from gold, you want to.
Yeah, I mean, we got to talk. The other big commodity is going to be oil.
Yeah,
I mean, that's the other one tanking.
Yep.
I wanted to offer kind of a word of warning here. But anyway, let me switch over to oil. Oil is in kind of the same thing. Now, yesterday we saw an absolutely huge again, coming from this 57.86 area and pushing really all the way up into the 61. We had kind of tops that we like to see. I'll call it a failure to go higher. Nice candle formation. We pulled back a base, and it actually came and used that same level. You can see the red and the green here, the 1 to 3 risk to reward ratio. And we've really pushed all the way back down again. Now, this is an area where we not only had a gap, but we had some basing. Very interesting area that, if we can get a clean break below this 5940-ish area, I could see this coming back down again. And again, just because we had such a big rally up again, all of a sudden everything warm, again, push right back down to the downside. These big pushes, these very, very fast moves with not really a lot of data. And again, remember, U.S. market was closed, Chinese market was low volume, boom, it exploded. Those tend to get retraced again. Those are more kind of speculative trades out there taking advantage of low volume. So I'd be looking at type of a rollover back down on that one. Again, maybe not a knockout on this, but this could be, some type of binary, particularly. And again, we'll dive into this more, but, with oil inventory tomorrow, I'd be looking for setups on this one in the next 12 hours.
All right. Let's just do this real quickly. And by the way, I want to remind everyone that in 3 hours? In 3 hours. Yeah. We're going to be doing a deep dive into all these markets today. So if you haven't registered for the webinar, and we're going to go into it for a full hour. Right now, we're just trying to do a quick 15-minute hit and run. But for oil, Yeah, I guess it really is. Again, just pay attention. It did do this big run up. It got above $60 a barrel. We're seeing it pull back a bit. This morning, a little bit of some price action in here. I think this is people still trying to digest the news. What's going on? You see a spike in the futures a little bit. That could be because people are hearing about the spot markets taking off. And realize there's a difference between the futures market and the cash market. And right now, the cash markets are completely out of whack. Oil for delivery. I mean, people need it to heat up and run their operations. They need nat gas. I mean, they're looking for anything. Electricity is even going a little haywire right now. So you're seeing some disruption in the spot market, in the delivery, in the actual physical market. Some of it might translate a little bit this morning into the futures markets because people don't understand necessarily the full-blown difference between the two. But all this is really being driven by the storm, which will eventually pass. But it's disrupting things right now. Let's do one more thing, and then let everyone get ready for the day, and then hopefully everyone will join us back here when we do the full-blown session. I know we want to talk. One, you wanted to mention something in gold, and then anything in currencies. I think
we did gold.
Oh,
we did gold yeah. Okay, yeah. You can switch it over because again, they're all related. All this is related right now. Okay. So another comment from below this morning was basically giving a warning out there for Bitcoin and just cryptocurrencies in general, but particularly Bitcoin. It says you don't want to be you don't want to go with a non-uniform currency. Now, many people take this as a warning, and there's been many warning signs out there talking about regulation, the outright ban, both in the United States, overseas. China in particular has also talked about banning it. Now, remember, since the beginning, Bitcoin has been kind of an anti-institution, like anti-government. They're not going to track us. Kind of the same idea of what Reddit was doing. The reason why, and again, the whole Reddit trade was we're going to stick at the Wall Street, right? Well, we know how that turned out. I mean, if we look across, you guys can see there was this crazy rush up, right? Crazy rush up, and now we're back to where we were before, right? Nothing has changed. We're all the way back down here at $52. This was sticking at the Wall Street. Wall Street still exists, and money just changed hands. Bitcoin has had a huge push up, and it's kind of the same thinking right now. The Fed is the one that makes the rules. They say what's acceptable, what's not acceptable. Bitcoin is one of those things where you can say, oh, no, we're going to go there because that's where we're. No. If large institutions and large countries start to ban it, and there's no way for us to actually use something like Bitcoin, you need to be careful. And watching the dollar index spike, it's obviously messing with a bunch of currencies. So here's one currency trade that I think we should keep our eyes on today. The dollar yen. It directly goes with the US dollar, US indices. Right now in 3 hours, we've had an absolutely huge drive of about 60 pips, which is a lot, right? The standard ATR in 1 hour is only 14 pips. It moves 60. So it's gone quite the distance in that time frame. We have driven now into an hourly level. So all of the pre-market news, quotes, everything is out. We've had that emotional reaction forward, now starting to base. The big question now is if we can hold here for the next 15 minutes, if we can weather the storm at the open, this is also giving us a pretty good opportunity to be able to take this one short. And these are the type of trades that I like. These are those parabolic retracements. Now, it is pushing at the very, very brink of a 4-hour zone. The next one doesn't kick in till a little bit higher. So it's kind of one of those situations where if we can make it, and this level will hold here, very shorting opportunity from 105.68. But if we do punch through because of all the retail traders playing catch up here, again, the next level, and again, this is a 4-hour level, and I love my 4-hour levels, 105.97. So right around that 106 time frame, or that 106 price level would be two areas that I'd be looking for reversals back to the downside.
Excellent. So with that, let's just do a quick little recap because there was a lot in there, and we'll do it in reverse order. One, US dollar, Japanese yen. I'd say check it out in the binary options, and you might look for a reversal after a bit of an emotional spike this morning, looking for it to roll over 105 spot 70 or just thereabouts. Something to keep an eye out. Opportunity potentially with the yen. Two, gold is getting hammered this morning. It does its death cross. We are seeing some buyers tend to step in just below that 1800 level, but know that there was quite a bit of negativity. Again, a strong emotional move down. You might see some support, might be a way to play that on a bounce. Took a look. There's some knockouts that are right in there that could be interesting where you could try to play it. It's a Delta One product. If you think gold's going to bounce back up, you might be able to catch that one in a bounce. But if you're wrong, you're stopped out below. And then the energies markets. A bit haywire. So just be aware that there's a disruption in the physical market right now with what's going on. And you might see some of the pricing craziness in the spot market of energies, namely nat gas and oil, impact the futures markets a bit, which could cause a little bit of volatility, which, again, if you're trading binary options, there might be a way to try to quickly capture on some of that, in some of that craziness. Just be aware of what's actually going on. Brian and I are going to be back in 2 hours and 45 minutes. We are going to do a full-blown session of all the markets. We'll jump into all the currencies, but we wanted to give you a taste to get you set up for the open here in 15 minutes. You got any questions for Nadex? Email us, customerservice@nadex.com. Any questions for Brian? Support@keeptradingsimple.com. If you had some time, trustpilot.com/review/nadex.com. Would love if you gave us a review. That would be really greatly appreciated. Takes a few seconds. If you could do that for us, we'd appreciate it. With that, want to let you guys get ready for the opening for the equities, all looking a little bit higher. And please register or join us in 2 hours and 45 minutes for the webinar. If you haven't signed up for it, nadex.com, you go to learning webinars, you can register, and we'll do a full-blown session on all of these and more. Brian, any parting shots before we go?
Nope, we'll catch you in 2.5 hours.
Excellent. All right, everyone. We'll see you in a bit. Good luck in the markets. Thanks.